just to kind of introduce myself and taxback.com and the reason for the presentation today. So taxback.com, I'm not sure if you're all familiar with it there, we're a tax specialist and we deal in multinational corporation. We're over 100 countries, we've got about 1,500 employees, and we work in both corporate and personal taxes. So anything from your tax refunds to your tax returns to your company returns, we look after the whole lot. Myself personally, I've been with the company 10 years and I deal in the income tax side of things, the personal returns for Irish PAYE employees. We were established in Dublin back in 1996. So we had our 21st birthday there a while back and we're fast approaching our 25th there. And we have 30 offices worldwide with over 1,500 employees. So kind of relevant to today's presentation, and what's probably a little bit outdated on this is we kind of have about 1,500 offices at the moment there because we're all working from home there. So today's presentation is going to be focused mainly around the e-working relief. So first I'm going to discuss what is e-working, who would be deemed as an e-worker and who would qualify for it. Second thing I'm going to discuss then is going to be the payments from the employer. So your employer may be able to make a payment to you, how much they can pay to you and what kind of payments can be made. The next thing we're going to move on to, which is probably the key area of interest for everyone, is the e-worker relief, so the tax relief that you can claim because you're working from home. Finally then, we're going to skip on to other tax reliefs. So there's going to be other areas that you maybe do a refund in relation as well. So we like to cover off everything when we're discussing it there for you. The next step then is going to be how to claim it back. So how to go about claiming back your refund, whether you're claiming it directly through the tax office or if you're claiming it through an agency like ourselves. And then the last part is going to be Q&A session. So once I've run through everything on the presentation there, we'll have a few minutes then set aside. So if any of you have any questions, then you can bring them up there and I'll try and answer them as best I can for you. So what is e-working? So you're deemed to be an e-worker if you work at home, either on a full-time basis or a part-time basis, and you have to either log into a work computer to work remotely, or if you're working at home developing ideas, products and services remotely. So either of them would deem you as an e-worker. So you could be working at home full-time, or maybe a case that you work 3 days a week in the office, 2 days a week at home. What do you get for that? So when you are working from home, your employer can provide you with a computer or a laptop, they can provide you with a printer or a scanner, they can provide you with office furniture, telephone, mobile, broadband, any or all of the above there. So whatever is relevant to your job, your employer can provide you with that. Key thing in relation to that is that they're not deemed as a benefit in kind, where the private use is minimal. So if your employer provides you with a computer and a mobile phone to work, if it's the case that you're working 8 hours a day and you happen to pop into your Gmail once or twice to check and see your personal emails, that's not deemed as benefit in kind. The use is minimal there. Another key thing to bear in mind as well is if anyone's a homeowner, when it comes to selling your property, if you're working from home, so if you're e-working, it's not deemed as business use for your CGT return. So it's not going to affect your principal private residency there. So it's a really important thing as well there, that it's not going to have any negative impact on that there. Key thing that needs to be taken into account here is that there must be a formal agreement between yourself and your employer. So the e-worker, you're not deemed as an e-worker if you just bring home your work outside your normal working hours. So if you're working in sales, for example, and your normal working week is 9 to 5, Monday to Friday in the office, but because you've targeted that you want to hit or you want to be the #1 salesperson, you bring home your work at the weekends and you're doing extra hours on the weekends there, that's not deemed as e-working. So there has to be a formal agreement in place between you and your employer that you're working from home for a certain length of time. So what can your employer pay you in relation to it? So if you're an e-worker, your employer can, but they're not obliged to pay you up to €3.20 per day without it being subject to PAYE, PRSI or universal social charge. So it's very similar to if you are receiving expenses in relation to mileage. So if you have to travel to and from a different place of work, you get your tax-free amount there in relation to your mileage. This is similar. So your employer can pay you up to €3.20 per day in expense in relation to that. What does it mean to you? So it's a value to you. So if you're working 5 days a week, working remotely, and your employer is making this payment to you, it can be worth up to €16 a week, which equates to about €64 a month, or it can be up to €768 per year. Where the 768 comes from, it's assuming a 5-day working week and a 48-week working year. So it's if you're working and getting your 4 weeks annual leave, you're not going to get an expense for the days that you're off there. What's this payment for? The payment is to cover your additional costs from working from home. So your additional Wi-Fi bills, your heating bills, utility bills, gas bills and stuff, that additional expenses onto yourself because you're working from home. There's one thing to note in relation to this: there's no obligation to your employer to pay it. It's a discretionary payment. So what we have found with the majority of employers is, if it's a case that e-working was set up prior to COVID, so if it was something that was in place already, a lot of employers were paying the €3.20 per day. It's discretionary, so they were paying it there. But post-COVID, as you know, a lot of us were sent home on the 11th of March and are yet to return to the office. There was no process in place for this, so the majority of employers are not in a financial position to be able to pay it. So as a result, they're not making the payment. It's discretionary, so usually when there's discretion, people don't do something unless it's mandatory there. So all is not lost though, because there is the e-working relief that you can claim back. So what if your employer doesn't pay? You can claim the e-worker relief. So there's two things that make you eligible for e-worker relief. First of all is if your employer isn't paying you the €2.20 a day. And the second is if your employer is paying you the €3.20 a day, but your allowable expenses are over the €3.20. So if your utility bills are colossal for the day, there may be potential for you to claim a relief. One thing to note in relation to this is revenue will allow 10% of your expenses as an e-working expense. So revenue will assume that 10% of the utility bill is relevant to e-working. So you can't claim, so say for example, if your utility bills for one day equate to €10, €9 of that is going to be allocated as personal use, and you can only claim 10% of that as your e-working expense. What evidence do you need in order to claim this? Really straightforward. So it's a letter from your employer confirming that either A, you're working from home full time and you don't have any element of working in the office, so you're a full-time e-worker. It will also need to confirm the time frame. So if it's the case that you're working for the full year at home, or if it was the case that maybe you were sent home on the 11th of March and you returned again on the 1st of June, the time frame's on it. And if it's a permanent thing, so if it's a case that it's ongoing or if it's only just a short-term thing. In addition to that, then you just need to keep copies of your utility bills. So the majority of utility bills now are issued online, so it's only a matter of downloading them and saving them into a folder that you can send at the end of the year there. What I'm going to go into now is an example just to give you the value of it, so you can actually understand what it is worth to yourself to claim it back. So for this example there, I'm going to round numbers out here. So we're just going to say that your utility bills covering heating, electricity and Wi-Fi come to €2,000 for the full year of 2020. We're going to assume that you're working at home for all of the year. So the total number of years in 2020 is 366 because it's a leap year. And then 48 working weeks at 5 days a week, it comes to 240 days. So you can only claim on a portion of that. So you can only claim for the days that you are working from home. So your €2,000 divided by 366 and multiplied by the 240 brings you to the 1,311.48. As I mentioned there on the previous slide, the revenue will only allow 10% of this as business use for your e-working claim. So this equates to €131.15. So your €2,000 has dwindled down fairly quickly there to €131.15. What this means to you, the monetary value to you, the value either the reduced tax bill at the end of the year or the increased refund for you, it depends on whether you're a higher rate taxpayer or a lower rate. So if you're on the 40% taxpayer, it's going to be a value of €52.46 to you. If you're a 20% taxpayer, it's going to be a value of a whopping $26.23 to you. Now, naturally, if your utility bills are higher, so say, for example, if it was €4,000 was your utility bills for the year, those figures would increase there. But we're just taking kind of the average utility bills would be about €2,000 for the year. So as you can see, there's a major variance there between the benefit that you get if your employer was paying you the tax-free expense as opposed to what you would get from the e-working relief. So the value of the e-working relief is between about €20 and €60 per year for people, whereas the value of payment from the employer is about €768. So we at the moment are advocating that a new category of flat rate expenses be brought into place by the tax office. It's not something that is currently in place, but we're advocating for it to be introduced there, because it's very penal. It's not a lot of money now to get 26 euros because you're working at home for the year, especially when it comes into the winter months and you're paying huge electricity bills, huge heating bills. So if this was to be introduced, the benefit to the employee would be huge. So as opposed to the 52 euros that I mentioned on the last slide, if you're a higher taxpayer, it'd be a value of about 332 euros to yourself. So it's a huge increase there. And likewise, the 20% payer, it goes from about 26 euros up to 166 euros. So what we are advocating there, we're going through a lot of employment agencies and stuff like that as well, to kind of lobby the revenue in relation to it. So if you see anything in relation to this on any of the news or media or anything like that, feel free to like it and share it and push behind it, because we think it's something that really will be of value to people. And especially in the new programme for government, they have said that they would like to incentivise working from home to kind of reduce the impact of COVID around the place and the environment, stuff like that. So we're really hoping that they will actually come through in the word and go ahead with it there. So this type of relief is already in place. It's embedded in the tax system, so it's really easy for them to roll out and straightforward to implement if they do. The next thing I want to skip onto here is the other tax credits and relief that you can claim back. So as I said there, the 56 euros and 26 euros, they're small relative to other things there, but what we like to do is when we're looking at your taxes is think of it all as building blocks. So your 56 euros will add on to different expenses and credits there and build it up to try and get the best possible refund for you. So the first one I want to highlight here, and it's probably one that a lot of people are aware of, is medical expenses. So in relation to your medical expenses, you're entitled to 20% back of your costs. So if your medical expenses are 1,000 euros in the year, that's a value of 200 euros to yourself there. So it's always really important. So it's any doctor's visits you had, any prescription fees, A&E visits, consultants, physiotherapy, anything like that. Make sure and keep your receipts for all that, because it all builds up there. The second one, and I think it's really prevalent to a lot of people, is non-routine dental work. So non-routine dental work is like wisdom tooth removal, crowns, veneers, braces is a hugely common one. It's anything that gets covered by a Med2 receipt by your dentist. Again, you're entitled to 20% back on that. And when you're talking about the likes of crowns, veneers, braces, it's a cost of thousands, more so than hundreds. So again, 20% of that can really build up your refund for you. Flat rate expenses, I touched on it briefly there in the last slide, but flat rate expenses is a tax credit that people are entitled to in relation to their occupation, and it can really help people's taxes. It's something that is in place already for over 300 different occupations. I've highlighted a few of them here that just are commonly known ones. So doctors would be entitled to 695 euros a year. Teachers are entitled to 518 euros a year. If you're a shop assistant working in retail, you're entitled to 121 euros a year. And if you're a really talented musician and you make it into the RT concert orchestra, about 2,400 euros there for yourself. So again, it's another thing, it's based solely on your occupation. You don't need to provide any receipts. So once you tell us you're a teacher or you're a doctor or you're a nurse, we'll know to take that into account and we can claim it over the 4 years for you there. So that's a really key area that helps build up refunds for people as well. Another one that's really relevant to people is tuition fees. So you can claim back up to 20% of your tuition fees over a certain threshold if it's an allowable course. So say, for example, you have you're doing your master's and it's 10,000 euros for the year there. If it's a full-time course, you have to deduct 3,000 from it before you can get tax relief, or 1,500 for a part-time course. So say your course is 10,000, it's a full-time course, you take your 3,000 away, you're getting 20% back on 7,000 there. So again, it's another huge way of increasing the refund. Another area that a lot of people don't seem to like to dip into, and it's something that's really valuable. So changing marital status is always a really key thing in relation to your taxes there. It's one that people avoid a lot. So I would have conversations with people every day of the week and they would say, no, I don't want to join my taxes there. I want to keep my tax credits. I don't want to give it to my husband. I don't want to give it to my wife. I don't want my tax credits going away. So when you're married and you get jointly assessed, the married tax credits, rates, bands, reliefs, and everything like that is exactly double what the single person ones are. So it just means that you get them and you can split everything 50-50. So you get to keep your tax credits, your spouse will get to keep their tax credits, but it gives you great flexibility in relation to being able to share subsidies. So one spouse may be on a higher rate of tax, one may be on a lower rate of tax. By merging your tax credits together, one can take 60% of the tax credits and leave 40 to the lower taxpayer. The 40%, the lower taxpayer isn't going to end up paying any more tax, but the person on the higher rate of tax may be able to reduce their tax bill there. So we'd always advise people to go down the route of joint assessment. It's something people are fearful of and they don't like to do it. It's just something that's ingrained in it. I think it may go back from years ago, 30, 40 years ago, that when someone got married, the husband would automatically get all the tax credits, but that's not the case anymore there. Everything gets split 50-50 unless you select otherwise. The other two areas that I've highlighted there in relation to year of marriage or marriage start is the year of marriage and conversely the year of separation. Naturally, we don't like to advertise the year of separation because it's going to be a sensitive year for people, but those 2 years are really key. 9 times out of 10, the year of marriage or the year of separation, you're going to be entitled to a tax refund because you get the benefit of both the single person tax credits and you get the benefit of marriage tax credits, and they get split in between there. So you'll always usually come out with a tax refund in those years there. And then a few other tax credits, because I don't want to bombard you with a million ones, we just kind of highlight the more common and prevalent ones, is the home carers tax credit. So like I mentioned before, the higher rate tax, the lower rate tax, if it's a case that there's a couple married and you have dependent children at home under the age of 18, if one is not working, or if one is not working or is working and has low income, so under 9,000 euros, there's what's called a home carers tax credit that can be claimed, and it's really valuable there. I think it's about 1,900 euros per year, so it's really valuable there. Conversely as well, if you're a single parent, so if you're the primary carer for a child, you're a single parent, not living with a partner, there's a tax credit as well that can be claimed there. It's 1,650 euros per year. So you can imagine that over 4 years can really build up. And then it's a lesser known and lesser claimed tax credit. It's a dependent relative tax credit. Now it's a smaller value. It's about 70 euros per year. But if you have a dependent relative that's financially dependent on you due to old age or infirmity or something like that, you can claim that there. So say, for example, if your parents are financially dependent on you, you can claim a tax credit in relation to them. Now there are hundreds of other reasons there that you could be due a tax refund. These are just the top ones, the highlight ones, and the kind of most commonly unclaimed and most common that people are entitled to there. But we'd review everything to make sure that you are getting everything there. But these are the key ones there that we kind of highlight to people. Another area I just want to touch on there, I'm not sure if it's going to be relevant to everyone, but I know it's a key area of interest to a lot of people at the moment, is the COVID-19 pandemic unemployment payment and the wage subsidy scheme. So there's two areas there. So the COVID-19 payment, that's the unemployment payment of 350 euros a week that's been brought in since the pandemic. And the wage subsidy is the subsidy that the employers can claim. So rather than having businesses shut down because their income was gone completely, the government introduced the subsidy scheme where the employer can get a subsidy for their employees there to be able to continue paying them rather than letting them go. One thing that really needs to be highlighted to people is these payments are taxable, but the tax is not deducted at source. So your 350 euros a week of the pandemic payment that you may have got, that's taxable. It's subject to USE and PAYE, but it's not deducted at source. The same with the wage subsidy. So if your employer is receiving a subsidy from the government to keep you on the books, to keep you paid, keep you on payroll, that's a taxable income, even though it's not deducted at source. So what does this mean? It means they'll be taxable at the end of the year, and most recipients, if not all, will end up with an underpayment of PAYE and USE at the end of this year there. Now, I don't want to scare anyone by this, we're just highlighting it to people, and we would estimate, it depends on your income, how long you got the payments for, how much subsidy your employer got, but it could be anywhere between 1,000 and 3,000 euros of an underpayment at the end of this year. The tax office haven't given any confirmation as to what they're going to do in relation to these underpayments. What we would imagine, what we suspect they will do, is they will claw them back over your 2021 and 22 tax credits, which means you'll end up paying more taxes over those years. So even if they don't increase taxes in the budget, you're going to feel the pinch in your pocket. So you're going to have less income in your pocket at the end of 2021 and 2022. Why am I highlighting this to you? It's because it's now more than ever, it's important to be proactive in relation to your taxes. So if you're one of these people that has never claimed back taxes before, has always been afraid to look into it or the tax credits, now is the time to actually start looking into things, because you can go back the last 4 years, and if you have any refunds or tax credits that you haven't claimed in the last 4 years, they're really going to help to either reduce this tax bill that you may potentially be facing, or increase up your refund there along the way for you. This is the area that's interesting to people, is how to claim back your tax reliefs. So as I mentioned there, the last slide, there's 4-year tax review that you can do. So it's not just the year that's closed or the current year that you should be looking at your taxes for. You can go back retrospectively for 4 years. So at the moment, 2016 to 2019 are open for review. So you can currently claim refunds for 16, 17, 18 and 19. The current year, 2020, you'd have to wait until January to review it or claim back your e-working relief and stuff like that for it. But it's really important to look at all the years, not just at one there. Where do you claim it? So there's 2 ways you can claim it. You can claim it directly through the revenue.ie, through your My Account if you're set up for one, or you can use an agency such as taxback.com to claim it back there. So when you come to ourselves to get a review done, as I said, we will automatically do the 4-year retrospective review for you there, whereas with the tax office you'd have to go in individually and claim each year and do the review on each of the years there along the way. What documentation do you need? There's not a huge amount of documentation needed there. So you do need to keep evidence of your expenses. So if you're claiming your medical expenses, you need to keep your doctor's receipts, your prescription fees and stuff like that. The working from home relief, what you will need is a letter from your employer. Most of the other tax credits and expenses that you're claiming there, it's more informational based. So say, for example, if you're claiming the home carers tax credit, you need to be able to provide the name, date of birth, PPS number of the children that you're claiming for. Simple enough. That's just for the tax office to weed out people that are making up virtual children there to claim their tax credit for. So it's just a compliance step put in there to it there. So the main thing to do is keep evidence of any expenses you have throughout the year. So keep any doctor's visits, receipts you have, keep your utility bills. The more information you have, the better. Then at the end of the year, if you send them over to us, if there's something that we don't need, so that's great, we can filter through and take what we do need from it. So we'd always say the more information, the better. But the basics to keep is your medical expenses and your letter from your employer in relation to the working from home. Why would you choose us, taxback.com, over the revenue to do your review? Well, there's a few reasons. So the first is individual consultation. So when you sign up at taxback.com for the review, you're assigned your own tax specialist who will guide you through the process the whole way through. So they'll go through your application form with you, they'll help you, and they'll try and highlight the different tax credits and expenses that are entitled to try and maximize your refund for you. So if you're applying directly to the tax office, the first thing you'll need to know is you need to know exactly everything that you're entitled to claim, because they're not going to come after you and ask you additional probing questions to try and increase your refund. They will issue a refund to you in relation to exactly what you've applied to them for. And also as well, the retrospective 4-year analysis can help a lot along the way there. Reliability. With the 20 years of experience, our main focus is on you and on your refund. We're working to maximize your refund, not just to get your refund or not just to file your return. It's to actually get you the best possible refund, the best possible outcome for yourself. So that's why our quality of service is really important there as well. Efficiency. So we have streamlined our process there in that you fill out one quick questionnaire that will cover all of the 4 tax years. It will cover all of the different tax credits and expenses that you're entitled to. By answering each of the questions on it, we will be probing in the background, trying to find the different tax credits, the flat rate expenses that you're entitled to there. You might not know why we're asking a question, but once you answer it as best you can, we'll be able to get the best refund there for you. One thing I suppose to bear in mind when you are filling in your forms is that there's no trick questions on it. So everything we're asking is to try and get you the best possible refund. So there's no need to hide anything from us. There's no reason to question why we're asking something. If ever you're wondering why we're asking a question, just remind yourself that we're working to try and get you the best possible refund. And then the final reason is our success rate. So the average refund we do find for people over the space of 4 years is about €1,076. So we have really good success rate in getting refunds. Generally, we find that most people are entitled to some sort of refund. The people that get the best possible refunds are the people that fill in the questionnaire as much as possible and send us over all their information, because the more information we have, the better refunds that we'll be able to get back. for you. So that kind of concludes my monologue there for the moment. So what we can do is we can open up everything there for Q&A session. So if there's anything I skimmed over too quickly, I'm conscious of the fact that I talk very fast. So I might have missed over some details on it, or if there's any specific questions you have, just feel free to shout there now.
Hi, just for the, if you're claiming back the EU working relief, what if you've two people in the same household, but they're not like related or spouses, or, you know, how does the utility bills work then?
Yeah, so you'd be claiming for your portion of it. So say that formula that I put up there, it was saying the utility bills were €1,000 a year. If that's split between two people, you'd be claiming your €1,000 worth of expenses and work the sums all the way down in relation to it. If there's 4 people in the house, you'd be taking €500 each. So you'll only be claiming for your portion of the bill.
You just submit the same utility bills, but you note that you're only claiming the portion. Okay.
Exactly, yeah, exactly. Anyone else?
I want to ask about taxback.com fees. So how do you get paid when we do an application for you?
Most important, yeah. So how it works is, I suppose, if you want to get in touch with us, my own email is across the bottom of the screen here, and if you just mention Iconic there, that we can set you up a file and do your review. So how it works is we work on a contingency basis. So if there's no refund due back, there's no fee charged, which is great comfort to a lot of people, because a lot of people are afraid that they'll end up owing money or they don't have refunds due back. So if we look at it and there's no refund due back, there's no fee charged. And then if there is a refund, the fee is charged based on the refund amount. So if it's over €400, the fee is 10%, and anything below that, then the minimum fee is €48. So what we do is we'll look first and see how much of the refund is due back to you, and then once we find the refund there, we'll send you over an email with a full breakdown. So we'll be able to say in the email, the refund is this much, the fee going to be deducted from is this much, and this is the refund that you're going to get at the end of it there. We do have an option if people prefer us to do a free review first of all, so they'd like to check and see how much the refund is without us going ahead and applying for it. If that's the case, you just pop me over an email and say, Marian, I'd like you to do the free review for us. And then in that case there, we find out how much the refund is, and then we come back to you and say, this is how much the refund is, this is what the fee is, do you want us to go ahead? So if you want us to do that, you just let me know and we can make a note of that as well.
Brilliant, thank you.
Thank you.
I just have a quick question there as well. I didn't live in Ireland for the last, say, 10 years. I moved back in October 2019. Would it be worth doing a review for another country, or how does it work in this case?
Definitely. So there's 2 areas there. So the first thing is I'm not sure if you've done your tax return in the country that you are living in, but if not, you can contact us and we can do a review on that for you there, see if there's a refund you back. But definitely for 2019, sorry. So definitely
go ahead. Yeah.
So definitely for yourself for 2019 here in Ireland, it is really important that you do a tax review, because you would be entitled to what's called split year relief. And what split year relief is you would be deemed as non-resident normally for 2019 because you arrived back so late in the year, so you wouldn't have your 183 days. But because you're a resident here in 2020, you can claim what I mentioned there as split year relief, and basically you will get the full 12 months worth of tax credits in Ireland for 2019, even though you only worked for 3-4 months in the year there. So if you have taxes paid or USC paid in the year, it's highly likely that we'll be able to claim back some, if not all, of the refund or the taxes that you paid in 2019. So it's a really important year. The same works the flip way around as well for anyone. If anyone's leaving the country, so say you decide in September, that's it, I'm done with Ireland, I'm moving to Australia and I'm going to follow the sunshine and go working there. If you're leaving the country during the year and your intention is to stay gone for more than a year, so stay gone for the rest of 2020 and you'll be gone for all of 2021, there you can claim split year relief the year that you're leaving Ireland as well. And there's really good refunds to be got for that, because you will have been taxed all year long on the assumption that you're going to be working the 12 months. Your tax credits would have been split over the 12 months, so you would have missed out and you would have paid too much tax in the year. So that's another year that's really key to people to get refunds back there. So that's another thing to bear in mind.